right, Mortgage Rates 101 Part 2. Just want to talk about what we hear in the news regarding the Fed and the role that the Fed plays in the mortgage rates. Because oftentimes we will hear what the interest rate is from the Fed on their monthly meeting or whatever, and we assume that that's what the mortgage rate will be, or the trend, i.e. the Fed raises or lowers the interest rate, is the same for the mortgage rate. That's not entirely the case. What I would say is that when the Fed meets on that Wednesday and they do anything with interest rates, that kind of sets the baseline. However, we have seen in the past that the interest rate is lowered by the Fed, but mortgage rates either stay the same, or relatively recently in 2024, towards the end of the year, oftentimes the mortgage rates, depending on your individual circumstances, might have actually gone up, even though the interest rate went down. So when the Fed does stuff with the interest rates, that does set that baseline. Individual factors and economic factors also play a role. By and large, if you're looking at it from something way back and looking at a trend line, they will certainly mirror each other, but it is not the end-all be-all. So what I would say is it's worthwhile to pay attention to the long-term outlook. If we're looking at several interest rates increases or decreases, that tells you the direction mortgage rates likely will be going. But again, keep in mind that things do change, and it's not 100% like for like when it comes to the Fed's interest rate and the mortgage rate that you're going to be paying.